coaching session this morning. A gentleman who's looking for not protection, but looking to profit on bearish spreads. All right, so let's go ahead and go into other strategies. We're specifically talking about bear put debit spreads at this time. And let's go ahead and add that into our menu and save our configuration. And what the gentleman wanted to know, longtime user of Power Options, but in addition to seeing the sell warnings, he saw a couple of stocks that he were watching that suddenly gapped down. And he wanted to know, he's watching the stocks, he's seeing them in this trend, he's seeing them in this range. They're trading around, one of them was trading up above its higher Bollinger Band that suddenly dropped below the SMA 20 and went to the lower Bollinger Band. And what he wanted to know, of course, is how can I catch those positions? How can I catch things that just recently broke down from a recent high? Okay. Well, we got a lot of technical indicators that can be used in this case. This is just our defaults for the bear put debit spreads. What are we looking for? Now we're looking for a net debit of less than 450, a return of 4%, 20 to 30 days out in time. Conservative, these are not the one-to-one at the money debit spreads. These are the in the money. So we're looking for at least 2% in the money with a 70% probability of being assigned. In addition to that, we're looking for stocks that are trading below the 50-day moving average. No earnings between now and expiration because we don't want sudden surprises of a depressed stock having a sudden jump because earnings came out and it was profitable. But what we looked at here is we did take out the average broker recommendation filter. And we changed this to the SMA 20 based on what he was looking for. But as you can see here on Power Options, in addition to being able to screen for stocks where the 20 days is below the 50-day, the 50 days below the 100, the stock in the SMA 20 is below the 50 or below the 100 or above if you're looking for bullish stocks, you have these fields here for this historical trends, meaning how many days has the stock dropped below the 20-day moving average or the 50-day, or when the 20-day is crossed below the 50-day or above. How do we do that? So what he wanted to see is ones that just recently had a crossover. So we simply changed the historical simple moving average trend filter here to under. And we're going to put in under 2 days out in time. So in the last 2 days, the stock fell below the SMA 20. Now, in addition to that, I would probably use the MACD signal as well, looking for a negative crossover where I want to see the negative. And I do this usually without this filter here. I want to look for stocks that are trending maybe below their SMA 20, but where the MACD has crossed below the signal line in the last 3 to 4 days as well. Keeping our same criteria, basic as it was, just looking, and I'm going to probably increase our probability too, but let's go ahead and submit the search there. And so now we have a few positions here that came up that match the other criteria, but just in the last 2 days, crossed below their SMA 20, and in the last 3 or 4 days have had a negative MACD crossover. Let's take a look at JP Morgan. Now the spread we're seeing, the stock is at 264.24, down 256 today. The March 275 put in the money by about 11 points. We'd sell to open that, and we could buy to open the 280. Nice 5-point spread. The debit would be 385 on the 5-point spread. So we're looking at almost a 30% return with about a 70% probability. I don't have probability select. Oh, yes, I do here. Where's my probability? Oh, I don't. Okay, so we did this on a different debit spread presentation, but I don't have the probability here. It's probably around 70%, 71% below 275. Okay, good bear put debit spread. For those of you that aren't familiar with it, this is what happens. We're selling the put strike here at 275 where the stock's at 264. So we're selling an out of the money put. I'm sorry, selling an in the money put and buying a higher strike. So even if we get assigned early and are in the money 275, our broker would exercise the 280. We get the 5 points different back on a debit of 385. So we're going to make $115 on the position, or 30% roughly of the 385 invested. JP Morgan suddenly spikes up and goes up to 278 and then goes up to 282. Well, now both puts are out of the money and they expire worthless. But what we wanted to see here, did we satisfy the goals we were looking for? Let's go to charts and let's go to big charts. Again, as I mentioned, I have mine set up as a 3-month chart. Here's my 20-day moving average line. It's selected with the Bollinger Bands as well. So the upper band, just as the conversation I had today. We have a stock that's riding sort of the upper Bollinger Band. It had a Bollinger Band breakout about a month ago. What does that mean? It means it went above its upper Bollinger Band and then closed above it the next day. That's one of the long call searches Ernie created, the Bollinger Band long call search, looking for positions like this, where when it broke over the band at 260, it did continue up to 280. So that might have been a decent long call approach at that time. But now we've just crossed below the SMA 20 2 days ago, still trading below it. And there's our negative MACD crossover. This is the MACD. The blue line is our MACD. The EMA 9 or the signal line is the red line. When you see a positive crossover, that's usually when you want to look to buy the positions. But when you see the negative crossover, that's when you want to enter into a bearish position. So I'm sorry, I should say you want to go long, not buy. You could buy a put here, but you wouldn't want to. That's when you want to buy a call. This negative crossover here is when, and a stock's trending around the SMA 20, that's when you look to buy a put series. And this is when you look to buy a call or do a bullish spread. And then now here, we're looking at a trend that's starting to show us that, yes, maybe we want to consider a bear put debit spread. Maybe we want to consider buying puts on this. But the one question we always have to ask ourselves, and this came up in the conversation, once we set those settings with the historical SMA 20 that he was looking for, to see only stocks that had dropped below their 20-day moving average within the last 2 or 3 days, when I mentioned the MACD, he says, oh, how can we search for that? Well, we just simply say the MACD under the cross signal in a bearish trend for the last 3 days. Not a long-term trend, but just something that happened recently. But JP Morgan, this is here. And as we looked at the chart 2 days ago, 2 days ago, that's when the big drop happened. And then another drop happened. Why did that happen? Well, let's go to research and let's go to stock research. And next earnings is 411, but let's go back 2 days. All right, to go back to February 19th. Okay, it's still there. Okay. So what happened in both of his situations, the stocks that he was looking for, he said, hey, I want to see, we created the search to show him what existed today, as you and I just did. But then what we did is we ran it through the historical testing. We did a back test and say, hey, what on February 1st, if we ran this, what stocks would have appeared? And if we ran this 10 days ago, what stocks would have appeared? And he says, okay, well, there they are, but how could I have caught it before the break? And the break, of course, on one was February 8th, I believe, or February 9th was when it dropped below the SMA 20 because it had earnings before market on February 9th. The other one was earnings after market the day before. So those were just related on earnings plays. And that's with the question at hand. Do I do vertical spreads or those types of strategies on stocks that have earnings playing that they're going to fall? No, we typically avoid for bull put credit spreads, bear call credit spreads, bear put debit spreads, and bull call debit spreads. We typically avoid guessing. Now, I might do, a combination of 2 debit spreads to create sort of a condor position if I think I'm far enough out of the money where historically the stock doesn't move up or down more than 7 or 8%. But you can get caught with that too if it's a surprise earnings one direction or the other. But the earnings is a flip of the coin. You can have stocks that beat earnings but lower guidance. There's a big one on Thursday, I think, that beat their expectations. It was a retail, right? It was a retail store. And then they lowered their future guidance for 2025 due to trends they're seeing in consumer purchasing, effects of inflation, and foot traffic in the store. The stock dropped 13%. They succeeded in the last quarter, but the future guidance, not so good. Or, the future guide, the earnings could be terrible. They could have missed expectations across the board, but say, we did this restructuring in the last 2 months, and our projections for our profit for next quarter are going to exceed, and our yearly should still be above what our yearly expectations were. And the stock moves up 9%. And that's why it's hard to play a standard directional vertical spread around earnings. Now, you can go as far out of the money as you want, but you never know when you're going to hit that surprise 15 to 20% movement one direction or the other. But the key is, similar to what we were talking about with the VIX, buying calls on the VIX. Is it too soon? Is it not too soon? Should I wait for 2 days? Sometimes you might not need to. You can look for positions that just had a recent break in a trend below the 20-day moving average, crossing under MACD, crossing under the signal line in the last 3 days. We opened that up a little bit, so let's see if we get some more results. There we go. Yeah, Fiverr was one of the ones that was on the default search. I think CNK came back up in, KD was there, and Etsy. I want to take a look at KD real quick. I don't know this one. Oh, and this isn't even that bad. But all three things have happened, hasn't it? It was in a stable. It had a little breakout here. It had a Bollinger Band breakout, actually, it looks like. Yeah, it closed and stayed above the next day, but it couldn't hold on to it. And just recently, it just had that negative MACD crossover, and it just dropped below the SMA 20. But again, true chartists would look at it and say, yeah, but if it's at here at this point, realistically, I'd say it's unlikely. It could hit 35, but it's probably never going to, it's, not going to go above 43. It's not going to go below 35. Is this enough profitability from where it is now to buy a put option in this case? It probably is, depending on the volatility of this particular stock. It doesn't look like something that's overly volatile at all. So it's a possibility, or good bear put debit spreads. You're not putting up as much. Hood, of course, had that big, almost 10% drop today. Okay, it was about an 8% drop on Robinhood. Sorry, folks, once again. And I'm not sure if that was related to earnings. I didn't see. No, 512. Yeah, so this was they had earnings dropped 8%. So they had earnings about a week and a half ago, I'd guess. It's okay. So yeah, still 512 there. So something happened today on Hood. We could check the news, but in general, could have been a competitor that had that earnings today that brought Hood down as well. Oh, sorry, folks. But that's some of the advantages, not just screening for stocks that are below the 20 or 50-day moving average, but looking for recent trends. Or if you want to look for more long-term trends, you just flip the opposite. Remember, we're in bear put debit spread, so we're looking for stocks that are under the 20-day moving average, let's say at least by 8 days. And have at least an 8-day or more that they've had the negative cross signal and still holding it. Now, this would be for more downturn, longer term downturn. You've got Tesla, of course, at 337.80, PayPal at 74.95. Let's take a look at their chart real quick. Yeah, so since that break, this is probably due to earnings, they've just been continuing to fall down. The MACD is still negative, tried to fight back recently, but we're still well below the 20-day moving average. That's more of a pronounced downtrend in this scenario. Okay, but the important part is you want to see something that's had a recent change. It's moved recently above or below a certain moving average. That's the MACD or the Bollinger Bands even, where it's broken above, recently the stock closed above or below the upper or lower band. You can filter for that, but you can use these historical simple moving average trends as well to see the number of days extended downturn or upturn, or just recent downturn or upturn. And same with the MACD as well. And of course, number of stock days up or down. If you wanted to do that, I typically don't use this one as much, but I do use the MACD signal for some of my searches, bull put credit spreads, calendar call spreads, for example, as well as these historical trends for the moving averages. So it's always something to consider. In addition to screening against the moving average, you can screen against the days